Hello, welcome back, Mike from Canavan Wealth. It is November already. Where has the year gone? It was a tough October, not going to lie. We're going to look at the markets here in a minute. For my clients, really, the only things going on right now, required minimum distributions for anyone over 73 or has a beneficiary IRA. You've probably heard from me already. If not, you're probably on the very short list of folks that I still got to reach out to. And then hockey tickets. So if you do want to see the Spud Kings play this winter. We have, I think most of them are pretty tied up through the end of the year, but we still have plenty of tickets available through the second half of the season, kind of after the first. So give Lynn a call at the front desk and she will get you set up with some tickets to the Spud Kings. All right, let's jump into the market. So today's actually a pretty good day, up about 0.6, 0.7. The Fed just broke the minutes, which for whatever reason, despite the fact that they said exactly what they said a month ago, and it tanked the market, it seems to be doing well today. Maybe they believe them this month. So um, here we are with the S&P 500. Oh, actually, that's not the S&P 500. That's the 10-year Treasury. Here we are with the S&P 500. If we go to the 1 month percentage, now this is only going to show us down about 1/3%, but that is only starting from October 4th. If you include the first couple of days of the month, we're down about 2% this month. It felt a lot worse, and it was a couple of days ago. We've seen this kind of late rally in the month. Now, November is kind of classically, I would put no weight on this whatsoever, classically a good month for the market. September is typically the worst. They often call it the Santa Claus rally. So are we going to rally and kind of get back to where we were? We look at the year-to-date numbers, kind of back at the end of July. We're off almost 10% from where we were at the end of July. We're going to get back up there again before the end of the year? Who knows? Maybe. Simple truth is we might stumble along kind of at these levels for a good while, waiting for, it really has nothing to do with the economy, really waiting for consumer sentiment, which is why I'm going to jump into this perfectly timed article. I could not have said this better myself. The economy is great. Why are Americans in such a rotten mood? So I love it. They even have this little graph here where they're showing the misery index next to the sentiment index. And it's funny, the misery index is nothing more than the unemployment rate plus inflation. And generally, this some college has said that you can effectively, people in America are miserable when unemployment and inflation are high. And that's actually not that high right now. Inflation was high, I understand, but it's down in the 3 to 4% range, and unemployment has been at record lows for months and months and years, really. So this is where it's plotting out now. So when misery is high, sentiment is low. That's consumer sentiment. When misery is low, sentiment is high. But we're living in this world where there's really not a lot of misery, and yet we still are very pessimistic about the economy. That's the article kind of relates that to just kind of what's going on in the world. It's just a very kind of crazy time in the world, and every time is crazy in the world, but now seems particularly crazy, especially with what's going on in Israel. Politics are just all over the place these days. But this changes since fourth quarter 2019. So this was effectively the pandemic. This is the actual pandemic you see here. But look at GDP, payroll, median weekly wage above before the pandemic and trending up, and yet consumer sentiment is just through the basement. Like a lot of people assume that the economy is doing what their 401k is, and those things are very disconnected. You have to remember the stock market is trying to predict what's going to happen next year, not what is happening this year. And for the last 2 years, we were assuming that the Fed was going to drive us into a recession, which they somehow, despite all of their best efforts to make it happen, has not occurred. Of course, we have the Fed minutes again, where really no news here, which is we think we're done raising interest rates, but if inflation gets bad, we might raise them higher, but we're going to keep them steady for a while. The only new news there is we're going to keep them steady for longer, but that hasn't been new news for months. The Fed's been telling us that for a long time. So we've had great information coming out of the Fed. Everybody's been able to plan for this very well. But because of that, a lot of people have assumed that the economy would not be as strong as it is now. But it is doing very well. So, and then the other interesting thing about this, and I can't pull up all of these indexes because they're fairly complicated, but what has been shocking about this downturn for a lot of folks is that the the traditionally conservative investments, bonds and value stocks, have dramatically underperformed. The bond market, especially because it's interest rate driven, right? When interest rates go up, as they are, bonds do poorly. This kind of classic conservative investment supposed to protect you during stock market declines. Well, that's really where it all started. So bonds are doing well. Value stocks did very well in 2022, but this year down. It depends on what index you look at, but down almost 10% this year. So it's tough to see the stock market going up. And then if you have these kind of more conservative based stock investments like value stock, you see them going down. It's very, very disheartening. The investing world has changed dramatically over the last 3 years, and the rules that these kind of like conservative versus aggressive, many of them don't apply anymore, and we're going into really uncharted territory when it comes to investments. Now, the next year, we may get a brief glimpse of what it was, say, 20, 30 years ago, with interest rates back up in the 4 or 5%, at least on the Fed funds rate. However, if they come back down, if they come back down below 2-3%, we're going to be back in this very uncharted world. I think the outlook for the U.S. economy is very, very good. I'm going to do a video on it here on the future, but artificial intelligence is going to come for the efficiency gurus out there in a major way. And what by that I mean, artificial intelligence is going to, in my opinion, have a dramatic impact on white collar business and white collar positions. Not in the bad, everyone's going to lose their job way, but they are going to be so much more efficient. And that efficiency is needed because we are not creating enough accountants. We are not creating enough people who code, right? Like all of these people need to be able to do their job efficiently. And oh boy, has artificial intelligence come a long way. Even since I did the videos 6 months ago about artificial intelligence, it is just where it's come in 6 months. I can't even imagine where it's going to be in 3 years, 5 years, whatever it is. So, I think it is the same efficiency that we saw out of things like automation for, typically blue collar work that we saw 50 to 70 years ago. We are now about to see that in white collar work and see these massive increases in efficiency. So I think the future is very bright. We, of course, need to sort out the lunacy that is going on in the world with the war in Ukraine, everything that's going on in the Middle East right now. So a tough situation to kind of make a positive spin on. But I do think the future of the economy is bright, and the economy is doing very well now. We just need to say, look at that. So S&P 500 from 0.7 down to 0.3. No one has any clue what to do when the Fed talks. It's such a funny thing for me to watch. We think it's good news, then people are convinced it's bad news. So big swing, but we'll see if it goes negative today. All right, that has been it. Obviously, if you have any questions, especially before the end of the year here, just give me a call at the office. I'd love to talk to you. Otherwise, I will talk to you soon. Thank you.